Hey, hello. Happy weekend, everybody. It's January 12th, Sunday evening. So I thought I'd record some of the planning that I've done for the week, look ahead at the levels, at the market structure, and to still give you a better idea of how I'm looking at where we may find a good entry for the week. Um, so let's go ahead and go through some of the slides here. What I'll do is go through some of the weekly levels, look at the market structure, get a gauge of the macro that might be an influence on where we can move towards this week and also for tomorrow. And then we can drill down on we can drill down on the levels for the daily range to get a really finite specific entry point. So let's take a look here. This is the weekly profile for ES last week. If it's not so visible, let me just blow that up here. So what we have here is just the weekly volume profile. If you haven't really followed the charts too carefully, this is the periodic volume profile, and I'm showing for the 1 week. Here in orange is, excuse me, the volume point of control. Right now that's at 5949.50. So that's where most of the volume came in, mostly from the last 3 days of trading. You can see there was a lot of chop here from the 8th down to the 10th here before we had that big sell-off on the news on Friday. And then way above this, there's all this purple, all these purple rows, which indicates there was a lot of selling here and some buying right here at 6,005, which is mostly attributed to that little rally we had on Monday last week at the very beginning of that little short squeeze. Market came down and bounced right off of that. And in fact, that caused a lot of buyers to come in. And that helped the market come down quite quickly when it reversed. All of those buyers got stopped out. So the open interest there may not no longer still be buyers, but that would have net effect that had a little gap, and it was easy for the market to gap down. And if we look at the bottom now, if we look at the weekly low where we finished here, there's quite a bit of buyer delta here. Not necessarily oversold, you could say that there was a lot of buying here. Maybe it was short covering interest to push the market price back up. But because it was not oversold, near the end of the day, you could see it came right back down, down to about 58.60, 58.55. So that's just a little brief look at what the weekly structure looks like. And if we go to more of a longer view of what's happening here, I just have the VIX here, the 2x VIX futures on the top. I have the ES here on a more wider view from basically December 11th to January 11th, 1 month's view. And on the bottom, I have what I find very useful indicators of momentum and relative strength. So we have RSI and CMF and ADX here, just giving us an idea of the relative strength here. You can see it's quite, the blue here is getting towards the lower end. And in green, that's a gauge of the momentum. So how strong is that trend? You can see early on in December, we had a really big move up. ADX was very high. And since about year end, it's really sagged off here. That momentum is coming down. So that upward trend near the end of December, while it was still, it seemed quite bullish, it wasn't very strong. It wasn't moving very fast. Probably year end people are not going to be committing a lot of money because they just want to get over that endpoint and not disrupt their P&L too much. So then we get to this point in January here, just this big cluster. You can see things are just going up and down, up and down. And partly that's due to low volume at the end of the year. Partly that's due to rotational work. But if we kind of drill down to what's happening here, let me just go back to that here. A lot of that's due to the rising rates since about the time of the election. You can see here is the box here was when we had pretty much that election week, and when the U.S. Fed Reserve decided to obviously cut the rates there, but they mentioned that they may not be doing too many more cuts, and still data dependent. And the data has been very much saying that inflation's still in place, hasn't gone away. So you can see the rates here for this 10-year yield on the left, the rate for the 10-year yield in the middle. And both of them have been rising quite rapidly for the past month since that 1 month scale I just showed here. So it's been going straight up almost for the 10-year yield. The shorter term is kind of up and down, but on Friday we had this drastic jump up after the non-farm payrolls data. Basically, there's a lot of jobs, a lot of hiring still. Services inflation continues to rise because of that strong demand in hiring. And as a result, not only are the yields going up, but because the 10-year yield's rapidly going up, we have a bigger spread on the short and long-term duration. So that's going to give the equities a bit more pressure going forward. So if you just go back here, you can see a lot of that since pretty much the top here, it's been coming down slowly. I don't have here on a chart the yearly view, but what happened here at the very top also was we reached that yearly 1618 or the monthly 1618 level, and that simply caused a reaction. So I can maybe pull that chart up here in the moment. But just going ahead here in this week here, the 13th to the 17th, very big week ahead. Lots of big data coming out that will have a huge impact on those rates here, right? So we can see the 10-year yields stretched quite a bit. Whether or not that's going to come down or will depend a lot on the data that comes out on Tuesday. We have the producer price index. Wednesday, we have the huge one. It's the inflation rate for the US. So that might be a yo-yo day, up and down on Tuesday, Wednesday, or it could just be a straight line one way or the other. Assuming that inflation continues to be persistent, I'm not sure that it will be a huge rally. Maybe we have a bit of reversal, but this is right now looking like a forecast of pretty much flatline or higher. And then on Thursday and Friday, we have the retail sales data and building permits and housing starts. And that also causes a lot of impact to those yields. So that might have continuation of volatility. So if we just now go back to that 1 week profile here. So this is that 1 week profile that I showed earlier. But now I'm going to extend it a bit lower to see what's happening below us. So this is showing us on the very left that week between November 5th and 11th. Here, it's a bit cut off. You can pull that up on TradingView. But essentially, there still remains a lot of buyer imbalance from that rally week right here, this green blob here. And you can see the market just continues to drop off here. And without really strong support, it's really thin right here between 58.20 and 58.60, so not a lot of prior printed volumes, and that's what you would usually typically see as a support areas. A lot of prior printed volumes is not only necessary, but that's usually what causes the reversal, because once that gets hit and stopped, we have a bit of reversal. So in lieu of that, we still have this potential downside down to 57.70, I think. Now if we go back to now a 1 day profile. I'm not sure if it's cut off here. Sorry, I forgot to mention here on the upside though, we still have this little gap here that came in place from the Friday sell-off. So there was a bit of imbalance because of the Friday sell-off up to 59.50. So below we have this weekly big patch of buyer delta down to the 57.70s, and above we have the big patch here from the Friday sell-off to 59.40 to deal with. So that gives us a pretty wide range to look into for this week. Like just looking at what's close by. That's what it's always important to see what's close by. Looking to the left, we have about 100-point range or 70-point range that could be in play. And then well above here, we have just from the close here, 58.60 up to 59.50. That's another 90 points. So 90 points above, 70 points below, that's really a wide range on its own. And then if we look at the weekly range that we looked at earlier, there's still that imbalance up to that 60-20. If for whatever reason the market goes bullish and gets above that 59.50 node right here, then there's an additional 70 points above here. So we have a lot of room. It's like elevator up and down kind of scenario. If it breaks here, we might go down here. If it breaks here at 59.50, we might get back up to that 60. So it's going to continue to be gappy between these nodes. So you can see that's what happened last week. There was just gap up and down, and in that prior week in December, it was just boom straight up, and on that one day straight down. A lot to do in part. This area, the volume is quite thin. And if we drill down now to the 1 day view, so this is the prior week, same box, but now I'm looking at the volume profiles, or the nodes for each individual day. So we have Monday, Tuesday, Wednesday, Thursday, and Friday. And Friday's right here. We finished here at the 58.60-ish level. That weekly VPOC that I mentioned, that's above here, the 59.50, it's considered naked. It hasn't been retested here. And it happens to also be where we had a VPOC for 2 days in a row, Wednesday and Thursday. So there's quite a bit of volume sitting there. If there's some sort of support here at the bottom and the shorts can start to cover, then we can probably see move back up here, supported by the fact that it's a weekly VPOC and it's a daily VPOC. So a lot of volume centered around this node here. Now it's probably going to be more difficult to shoot above that, despite the fact that there's a lot of seller delta here that printed on Monday and Tuesday. Using the same 1D profiles, the daily VPOCs, just to look at what's below us. So we just mentioned 57.70 below. Well, before that, we have this really big node here, the November 5th node that we've been all watching for a while now. That's the really big day, I guess you can call it. That was the election day in the US. And that's where a lot of short covering started, but a lot of buying happened, and really just a lot of change in sentiment, change in outlook for what may happen with the new presidency and the policies. So for now, the market has been trading above that 1 day volume profile, volume put in control, sorry. But we're getting close to it, and it hasn't touched it yet. It remains what we call naked, so it hasn't come back to sweep or balance out this imbalance here. So at some point along the lines, we may see it get close. It doesn't have to touch to the point, but it remains a gap here of 50 points. So we have now, instead of 57.70 below, we have 5800-ish, or 5802 if you want to be precise, and above 59.50. So now that we covered what the volume looks like, if we want to drill down to a very specific point or tick where we can get in and out, set limit orders, or just reduce our down draw, what I always do is throw on the fibs. And without the fibs, you can still rely on the delta profiles, but sometimes those rows can be not so precise. You may have a bit of blending, or you may have the algos come in a bit sooner or later than where the change in deltas may show. So I find it useful to combine both the fibs and the volume profile to give us a specific price where we might find correspondence between those two. So what that means is just put a fib on the weekly range, put a fib on the daily range, and then look at where there are not a specific high time frame level on the fib range lines up with your volume profile in terms of where the deltas are meeting up. So right here on this screen right now, I'm not sure it's visible. We can always jump onto TradingView, but I have the fibs for the full week here from that Monday high down to Friday's low, 0 at the bottom, 1 at the top. And then very often when we see a range like this is a very strong downtrend, and there's not a lot of selling below it, there's not necessarily oversold, we may see the price dip down to the first half fib, so minus 0.118. And you're following my charts, usually that 0.118, I put down potential sweep. And often that's where we might see the price come down, touch it, and then bounce up back into the range. So that level right there, it's 58.20-ish. It's going to be a very important spot. If you see price come below a prior weekly low, you can either short towards this level, or sit there and wait for the long if it ends up finding like a double bounce or equal low. And then below that, we see the orange line there. That's that November 5th daily VPOC. So probably we won't go back down below that very easily at first until there's more news. So I put this potential downside arrow down to here. And you can see that's sitting kind of in between these two fibs. So it's kind of a weird spot to stop. So I would probably expect if it does get below that minus 118, eventually we're going to get down to this larger imbalance, that 57.70 that we marked earlier. And that gets us down to minus 0.272 fib and lower. And we'll drill down on that in a second. So that's just how I would look for these ranges. And it doesn't happen, it may not happen right away on the first day or whatever, but when it gets to that spot, that's really what you want to gauge whether or not you can do an entry. Right now, it's hard to enter a short here just out of the blue, whereas it's probably easier to take a long once you see support form nicely. Now, where do you want to take a short? Usually you want to take it at a highest price possible for the range. So right now, if we look above here, there is this purple blotch here. That means there's seller delta. There's this volume profile, volume VPOC, weekly volume point of control right here at 58.50. And that happens to be about 50%, or let's be more precise, the midpoint between 0.382 and 0.5. So what are all these numbers? Basically, if you look at how the algos come in and out, they're pretty consistent where they'll stop the price and turn it around. They're pretty consistent where they'll come in at first for support. And usually on the weekly level at 382, we'll see some selling here. And then definitely at 0.5, we'll see it come back down. So if you don't do anything else, you just want to short, you can wait for that touch at 0.5 and it'll come down. And sometimes it's that midpoint in between. So you can see I have a blue line here in this orange box. That lines up almost perfectly, but not perfectly, with a weekly VPOC, that 58.50. So you might pencil it in here on order for a short right here, that blue line. And then you can put a stop just above that 0.5 if it does get past. But that's probably about a 5 to 10 points stop distance anyways. But anyways, you can gauge that for the week to see how the market reacts here. If it gets held down very, very strongly here, then it's very likely that we're going to come down further to the 57.70, because that means the sellers are continuing to hold this level down. And there really won't be a lot more liquidity except for coming back down to the lows here, or just to consolidate in this range until until Tuesday or Wednesday when the bigger news comes out for producer prices and for core inflation. So that might be a scenario where it just goes sideways for a couple days. Now, just not to go too long here, if we think above here, if it does finally break above this VPOC area, this 0.5, and this weekly one right here at 58.980, what we may see take place is then a short squeeze all the way back to this higher imbalance, basically the Monday's VPOC, so one whole week of reversal. And that gets us up to this, what I call the inside premium fib levels between 0.764 and 0.882. That's the next orange box on my color codes. And that's way up here at 60.20. So I would probably see a long if it comes down to here. If it comes above the 118, I take a long up to the orange box. And then what I call a long continuation, there's a breakout. If it gets above this 59.80, you can take a long from here to here, and that's 40 points. So there's no rush to get into that one. You can wait for that to happen. So just a quick summary, that weekly imbalance way up here at 60.20, that far weekly imbalance from November at 57.70. And right now that orange box in the middle is at 59.50. So that's probably going to be touched again at some point this week. And that will be a very probably strong node to monitor, at least until Wednesday. And then we have the one-day VPOCs, which often get revisited. We have the one at 59.70 from Tuesday, 75, sorry, that's above the weekly VPOC. And then again, the ones below here are more likely to be touched. So Friday, we finished at 58.60-ish. And then that really key one from November 5th, that 58.02. So we're running at 20 minutes here. It's probably long for a video, but you can always fast forward to the point that you might find relevant. Just now to look at the daily profile. So I'm going to end this video here looking at very specifically for Friday's range, how things look, because that's really probably going to gauge the range for Monday. So here on blue, I just highlighted the 9:30 to 4 o'clock window for Friday. And you can see the high here got shut down when it touched this VPOC and it came back down here. And then the afternoon high came back up here to the morning VPOC where there's a big cluster. And as we took the long here on Friday afternoon, came all the way up here for 35 or so points. And then it was pretty clear it would turn around here. That's the 882 for that daily range. Then it came right back down here. So you can see a failed breakout here. There are some sellers, but not too many. It's really just buyers who got stopped out. If you can see that faint amount of coloring. So you just load up my 15-minute chart or the 1-hour chart, you'll see this. But this also left us with this 4-hour VPOC from Friday Goldbex, or let's say Thursday. You can see a lot of volume here, a lot of orange lines, meaning there was a lot of consolidation around here, leaving us that big block here. Again, that's the 59.50. So for tomorrow, I would look for, if this continues to go up past this 4-hour volume area high here, this 58.80, we may see this creep up slowly overnight until Tuesday, back to the 59.50. And then below here, if we continue to fail to go higher than 58.60, there's really only one way, is to go down to continue to sweep that 58.02 area. So I highlighted those gaps on this PowerPoint. I'll upload this so you can see them as well. But these are the 3 spots that you may want to pay attention to. So the gap below here, there's some trap sellers, but mostly it's a lot of buyers who came in early, like us, around the 12 o'clock spot. So the pre-lunch liquidity, and there's a lot there. So probably we get a tap out here until that's balanced out. We might not move. And then above here, there was that quick reversal around 2 o'clock, leaving us a lot of imbalance. Not a high amount of volume, but just mostly one-sided imbalance. And that might cause a bit of a gap up if the market does go bullish quickly through Globex. And again, here's this other gap that came down from the news on Thursday here. So again, 58.20, 58.950. If you don't want to have anything to do with the middle zone, wait for those 2 spots and just sit all day. And once we get there, I'll be sure to flag those for us for entry. In the middle, it's going to be up and down. So we have to drill down onto the 4-hour ranges, and we have to drill down onto the local fibs. So here I have the fibs for the Friday range. It might look busy here. On the far right, that's still the fib for the week. In the middle now, we have a fib for the Friday low and the Friday regular trading hour high. And all that does is help us to basically put lines on the football field, like I call it. You can see what it takes to get to the next move, I guess. If you want a first down, you need to break to a certain point and it'll continue to go. If it doesn't, then it'll reverse. So for instance here, for this downtrend to continue, probably it needs to break below this -118 priority RTH, so this first half fib. And I'm not sure if I have that coded, but that's about 58.35 here. And then typically, in order for the market to get down to that lower level, we require volume from either London or New York. So you might not see the 58.20 or 58.25 until the morning. And overnight, if it does get down to this blotch here, 58.30, 58.40, I'll be considering a long for the Globex. And then way up here, where we mentioned that 58.50, that prior rejection at 2 p.m., we have all these gaps. That happens to be the 0.76482. I call that an inside premium. And that's where the market reversed already. So we might see a retest there, and it may come down again. But in the meantime, you can look carefully here. There is some sorry, there is some seller delta here, but there were some buyers that got trapped here late day at the 50% level. So what that tells me is probably when it gets back up to this green block here at the 50% level, we should see this come back down again, because what happens is this might squeeze up, but then there really is not a lot more volume to squeeze, not a lot of easy stops to hit. And that's what moves the price are the stops. Then it may come back down a bit, down to this VPOC again. So you might see this up and down and then go back up, or up, reject, and come all the way back down here. So this is a very key price. I haven't coded on this box here, but watch that 0.5. So I've coded them, whoops, I'm not sure what happened there. I coded them based on numbers here. So watch for that reaction at 2, watch for the reaction at 1, and then the 5 and the 6, obviously that's the low area. So I'll use this color code for Monday, and then hopefully that may help you get a better idea what I'm talking about through the day. Because when I throw the fibs, that might be a bit too many, too many things going on. So feel free to ask any questions, message me, or preferably a message the group in the member chat, and we'll go from there. Hopefully that helped. Thanks for listening.